Radio and the Floor Show. Joining me now, the two Peters, Euro Pacific Capital CEO Peter Schiff and Creative Planning CEO Peter Mallouk. I'm just going to call you by your last names. Mallouk. S&P still impressing the socks off investors who bought the index at the start of 2023. They're looking at, gains of about 19%. But as we wind down the year, you make the point that when you stretch it out 2 years, you're essentially where you started. Do you expect that that's going to be the case in 2024?
I'm very bullish. I think if you look at, it's very excited to be about the month of, easy to be excited about the month of November or the quarter or the year. But if you look back 2 years, it's a whole lot of nothing for the S&P 500. Yes, big tech's done a little bit better than that. But really what we've seen is rates go way up and people start to see somewhat of a reasonably soft landing. And I think the future looks very bright, barring something unexpected happening, which is always on the table. Yeah,
Peter, I know you usually have a different outlook on that. Gold, which is one of your favorite investments since you were like 4 years old, is really perking up and has done very well. What's perplexing to a lot of people is that usually gold moves inversely to when we see Treasury yields. And right now, Treasury yields are back up after, I think, the 10-year had hit a 6-month low last week. We're seeing it come back here. The 2-year, same thing. Actually, it was the 10-year that hit a 3-month low, 2-year, 6-month low. But what is sort of the longer story for gold?
Well, first of all, I haven't really been bullish since 3, but I did put my bar mitzvah money into gold. And, you know, I sold it when I moved to California, and I used my profits to buy that little sports car I used to drive around in senior year. So I did well back then in gold. And, you know, I got my Schiff gold backdrop on. I got a gold tie on. I think this is gold's day. It's going to have many more. We hit a new all-time record high overnight, 2,135. I know we're $100 lower already because we got some profit taking on the big spike up last night. But I think 2,000 is now the support for gold. I mean, it could trade slightly below it, but this is not the end of the bull market. It's the beginning. You know, there's no ceiling on the price of gold because there's no floor to the value of the dollar, and the dollar is going to lose a lot more value, and you're going to need a lot more dollars to buy an ounce of gold.
Mallouk, give me a sort of your insight, because gold has no yield. Okay, I'm sure Peter has an idea of why it does, but gold does not pay out a yield. Treasuries do. Treasuries, at least certainly on the shorter end, the 2-year, the 6-month, the 3-month. People have been parking their money there because they get an instant 5 or 4% return there. Do you see that changing? Is that shifting beneath our feet right now?
Well, I mean, the way I look at gold, I mean, I don't have the backdrop. I agree with Peter on, which is that the U.S. government is constantly debasing the currency and the value of a dollar is diminishing, and it will take more dollars to buy an ounce of gold. But if you look at gold over 10 years, 20 years, 100 years, or 1,000 years, it's basically just kept up with inflation. It's underperformed bonds. It's underperformed every major stock index in the world. It's underperformed real estate. And so what you basically have is money. If you told me I had to put some money into something and wake up 2,000 years from now and be able to use it, I would choose gold. But that's not the world that I live in. I'm going to have to spend money in retirement 20 years from now, 20 years from now, 30 years from now. And I'd rather have something that's taxed at a better rate, has a yield, and has growing earnings. And that's why I'm a much, much bigger believer in stocks paying off for investors over 5, 10, 20 years.
Schiff, what about the Fed and the Fed playing into this? We've got a meeting next week. Everybody says it'll be a pause and the next stop is a cut.
Well, you know, I think they're going to have a hard time cutting rates. I mean, they're probably going to try at some point. I know they're going to go back to QE, which is just creating inflation. But I want to make the point on the stock market that, sure, for the long run, it's better to own productive assets, especially if you can buy them cheap. The problem is right now, U.S. stocks are extremely expensive, and historically, it's very dangerous to overpay for stocks. On the flip side, gold is actually very cheap historically. And if you look back at prior periods where inflation was a problem, like the 1970s, the price of gold in one decade where the Dow went down, the price of gold went from $35 an ounce to $850. So think about that percentage gain. And in fact, by 1980, the Dow Jones and gold were trading at roughly the same price. So right now you've got the Dow Jones around 35,000 and gold around 2,000. Imagine a world where both of those are the same price, because that's the world where we're headed, and investors have to prepare for it.
And how are you preparing, Maluk, when it comes to defensive equity classes? If you are, you say you're bullish, so I'm thinking maybe not.
I'm not defensive at all. I think that the Fed accomplished getting to decelerating inflation. It's not exactly where they want it to be, but it's getting really close. You see it in M&A activity. You see it in lots of different areas of real estate. You see it impacting small cap stocks. And I don't know if we're at the top of the mountain, but we're near the top of the mountain in terms of raising rates. And they've got to bring them down, or we're going to have a real estate problem. We're going to have a national debt problem that's worse than it is. So they're not looking to raise them more than they absolutely need to. And I don't know where the top is, but we're close to it. And because of that, I'm much more bullish. Small cap stocks, mid cap stocks. I think that there's been a big gap between large cap and small and mid. And I think if we start to see some softening, you'll see a rally.
Well, the Russell is the only index that has been in the green today and is still in the green. Great to have you both. Maluk and Schiff. Peter, was that a red car, I recall, the little one that you had in high school?
Well, you know, it was salmon in high school, and then I painted it white when I brought it up to Berkeley.
You're stalking me.
Yeah,
Beverly High,
I wanted to
Berkeley.
throw one thing out, because before I came on, I was listening to Charles Payne talking about Bitcoin.
Yeah.
And, you know, your late buddy Charlie Munger is already rolling over in his grave with all this hype now that's coming out about Bitcoin.
Yep, we're
But
looking at it right now.
gold is real. Bitcoin is fool's gold.
41,907 and climbing. Great to have you both.
For now.
Thank you. Yes, for now.
Yeah, for now.
Everything's for now. It all shifts. Okay.